Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation.
G'day and welcome back to Shares for Beginners. I'm Phil Muscatello. How can you start investing for kids? And more importantly, what steps can you take to teach them about investing from a young age for themselves? Today I'm joined by Malone from RAIZ Invest to explain investing for young members of the family and some of the traps to watch out for. G'day, Brendan.
Morning, Phil. How are you going? Good to be here again.
Good, thanks. Yep, thanks very much. Good to see you again in the big end of town there.
Yes, based in Sydney. It's a bit cold for the beginning of January, or for the middle of January, but we're pushing through.
Fantastic. Okay, now look, we're going to be talking today about investing for kids, or in my case, grandkids, and the experience I've had, all of the traps and the ins and outs, and how you can do it with RAIZ. And I just want to say at this point, this is to do with my personal experience of RAIZ. I signed up before Christmas because my grandson, who's 3 years old, I wanted to be able to start investing for him because every Christmas, every birthday, there's some. You know what it's like. Sometimes presents, especially at that age, they're going to last for 10 minutes and then they're gone. But, you want to give them a bit more of a something that they can take further in life. So I signed up for my own RAIZ account, which is a prerequisite, and then set up the grandson account. Is it as simple as that?
Look, it is as simple as that, Phil. And for the listeners out there, just a quick recap on what RAIZ is. And probably not actually what RAIZ is, but what we build our core principles on. And this is why it's so important for someone like your grandson who's 3, or I've got a 6-year-old son and a 4-year-old daughter. And, it's heartwarming and realistic to me what RAIZ Kids can do and what difference it can make. So RAIZ was built on the 2 core principles that small amounts add up over time. And that we can use, or you, in your case, or me in my case, can use something like RAIZ and the technology that we have today to lean on that to both financially educate and financially aware, financial inclusion, but also save and invest at the same time. So small amounts over time add up. And I think a testament to RAIZ and the hard work that the team have done here over our coming up to 9 years next month is that we've got over $1.6 billion of funds under management. So small amounts, whether it's $1 a day, $1 a week, $1 a month, add up, and we've got $1.6 billion in funds under management. So it's huge. And as I said, RAIZ Kids is the simple way to save and invest small amounts regularly for your children or your grandchildren in your case. Your uncles and aunties can set it up, or any other dependents, your godchildren or something like that. And what the way that we see or receive the feedback, it is that wide range of people, and it is, I love it. My father does it for my grandkids because it is better than a toy, as you say. Toys come and go, but what the difference is, and we've seen the stats, we've seen the guys talk about Avo and Toast, and we see the big end of super saying, what does $5 a day or a week mean to your retirement in next years? It's exactly the same principle. By the time Tom turns 18, he will have a nest egg there for him. That I probably wouldn't have had, or I couldn't turn up on his 18th birthday and say, here you go. So it is very simple.
Well, I'm hoping this for the Big O as well. I won't mention his name, but we'll call him the Big O for this, for the purpose of this interview. Now, I just wanted to go through the mechanics of setting up the account. So basically, when I set up the account, you have to have a minimum deposit of $5 per week. Is that the case?
Yes.
And then there's the cost. There's the $4.50 per. Sorry, I can't remember now.
I'll start from the top, Phil. It's to have a RAIZ Kids account, you have to be an adult and open an adult RAIZ account. And it's to get an active account started, you have to have a minimum of a $5 deposit. Now, I mean, I recommend that all listeners read the PDS and the additional disclosure document. Anything that I'm saying here is general advice, not personal advice, and we don't take into consideration the individual's personal circumstances. So from a high level, you set up a RAIZ account as an adult, you pass the KYCs, and you link your debit card or your credit card to it for what we call our roundup functionality.
KYC?
Know your client. So it's a bit like opening a bank account. You've got to provide your ID to say that it is Brendan Malone opening that account. And then you link your debit card or your credit card to it if you would like to use the roundup function. So what that means is you buy a coffee for $4.50 downstairs, we see that transaction, we round that to $5 and we put that 50 cents into your portfolio. And this is where the minimum of $5 investment becomes prevalent, because as those 50 cents, those amounts add up to $5 or more, we will direct debit your bank account or your funding source that you've linked and put it into the share portfolio you choose. So you've
because
done
that's the other part of it as well. There's the $5 a week that you're putting in just as a basic minimum, but then you've got the roundup. So when you add your credit card, for example, in my case, I've seen over certain periods of time that a few dollars go into the account as well from these roundups. Yeah.
Exactly. But you need $5 to open an account. That's the minimum investment. It's not a $5 weekly reoccurring. The individual, we've got the reoccurring functionality that you can set it up. It could be $5 a day, $5 a week, $5 a month. We see a lot of people set, and I presume that they're either on monthly or fortnightly or monthly. So you can see that on the 18th of the month or the 2nd of the month, people have a monthly contribution coming out. So you can set it up as long as frequently or infrequently as you like, but because your bank account is linked to it for a funding purpose, you can have one-off lump sum deposit. So it might be Big O's birthday, so instead of the grandparents and the friends and all that giving $50 cash, they can put $50 into the bank account, and you can make that one-off lump sum deposit into their RAIZ account. Yeah, so it is as simple as that. The registration flow for setting up an account usually takes sort of 3 to 5 minutes, depending on your personal circumstances and linking bank accounts.
It was pretty fast. It was very fast. Yeah.
For what we do.
And the verification, and also the verification is incredibly fast because, this is rock solid, bulletproof, regulated as well, isn't it, by all of the appropriate bodies?
Regulated, and our security systems as well. That's what does keep me awake at night, to make sure we're doing it right, doing it accurately, and everything's safe and secure. So once you've set up a RAIZ account for yourself, and I'll say Brendan in this case, then I can go in, and inside the app there'll be a functionality called RAIZ Kids, and I can add a new account. And what that does is, at the Brendan level, I can have a portfolio, and if you're using our standard portfolios for an explanation or an example, we have conservative portfolios up to aggressive portfolios. Each one of those portfolios are made up of 7 different ETFs, or exchange traded funds, quoted here on the ASX, but it's the weighting between the conservative to the aggressive that sort of creates that risk change from a conservative portfolio to an aggressive portfolio. So as an adult account, you pick which portfolio you would like. There's also our Emerald, which is our social responsible, or our Sapphire, which has a 5% allocation to crypto for the individuals that would like to learn and understand what Bitcoin is and how it works and the volatility of it. We have some property portfolios because we run our own RAIZ residential property fund here that now has 13 Australian residential properties across here for the individuals that would like some exposure to the property. And then we have our Plus, which sort of gets a little bit more complicated because what the Plus portfolio does is you can create and weight your own portfolios with about 102 ASX listed stocks, 48 ETFs, a 5% allocation to Bitcoin, or up to a 30% allocation to our residential property. So you create that in your name, and then when you set up a kids account, you could have it exactly the same portfolio because these are all pre-made, so you can select them to make life easier for new investors. Or you could have different portfolios. So, for example, my account's in the Plus portfolio because I'm testing and constantly changing the makeup of it. But Tom's account, being a 6-year-old boy, he's in the Sapphire portfolio because he does actually at 6 know what crypto is and talks to me about it. And Isabel's in the social responsible portfolio. So under my name, I've got Brendan Malone in the Plus portfolio, and then I have 2 sub accounts, one for Thomas in the Sapphire, one for Isabel in the Emerald portfolio, so that there is different exposure for those guys as well.
No Trump coin then?
Absolutely not. But as I said, Tom, I don't know where he gets it from at 6, but he did bring that up last week and he said, but Trump's wife's got something now, Dad.
Yeah, that's right. She had to get in on the action. It was funny. I was just as a bit of an aside, I was looking at an account on X, someone who works in financial services who just finished a 13-hour day. And she was talking to the cleaner, and the cleaner told her that he'd made $95,000 on Trump coin in 2 hours. And she thought, what am I doing?
I saw that, yeah.
Well, yeah, we know who we're talking about here. Yeah.
Unbelievable. Yeah.
Okay, so getting back to sensible investing, sensible, but maybe not quite so
Well, I think
profitable.
I think,
Sorry, go on.
Phil, a point on that is that why did we develop the Sapphire portfolio? Because customers or investors want to get an understanding of it, and per our previous conversations that we've had and podcasts, only one of my key philosophies is only invest in what you know and understand. So we built this Sapphire portfolio to have a 5% allocation, so it's only a maximum of 5%. And I explained to you last time that when Bitcoin goes to the moon, the investors will say, well, why does RAIZ only allow me 5%? But when it comes down, they say, oh, now I understand why RAIZ only allows 5%. So we created it from that. I'm not advocating crypto, but I wanted people to understand in an environment with guardrails on it that you can have up to a 5% allocation in Bitcoin to understand what it is and the volatility of it.
So what kind of recommendation would you make for parents or grandparents, aunts and uncles in terms of preparing for the future? I mean, I guess what I'm trying to say is what happens if the worst happens? How can you record it? You need to tell the parents what's going on, that there's an account here that's in their name?
It's I think it varies, and we can see the behaviour on the kids' accounts. Like I said, I've got a 4 and a 6-year-old. They're not logging into the app through the kids' portal and checking out the account balance. Tom will ask me. Isabel at 4's got no interest in it, but Tom now understands to a very limited extent, what the market is. And I did show him when the market dropped that his balance did go down on our performance graph. So he says, so what's market movement? So it's what the idea of that at the 4 to 6 to 7 or 8 or even 9, 10s and 13s is to be aware, financial aware, and sort of start developing that base of financial education. I have a 16-year-old nephew who has got he works at McDonald's. He puts the funding source for his account is his dad's account, but he said, Dad, I want to put $50 into my RAIZ account, and he can have a look at. And the parental controls we have in the app is the kids' account, are they able to change the investments? They won't get access to our RAIZ Rewards program. They won't have access to our super. It is just that portfolio. So we put some guidelines and some parental controls in there. So at that sort of 16-year age where they are interested in sort of savings and investing, either the crypto market or the stock market, they can actually have a hands-on experience, but with the guardrails and the controls around it. But it's all about the whole process, and even RAIZ as a wider product. Our number one goal when we launched was to make sure that we can financially educate, financially include with a hands-on experience in the palm of your hands, and people can understand what the markets are, get exposure to it, save and invest. And back to the previous conversations that we have had, everybody's got a bad habit of spending, so let's create a bad habit of saving, and that's why that roundup functionality says that you're saving as you go.
Getting ahead by spending more.
Yeah, well,
Hopefully
my wife does say that. But I save money, I put it into RAIZ.
Your path to wealth, spend more.
Well, people won't. We've all done it for years. We've had Excel spreadsheets, we've had pieces of paper with budgets and things. But I think we did a survey a few years ago, and 78% of customers said that they have a budget, but only 43% of it stick to it. And again, this time of year in January, everybody's got 2 New Year's resolutions, or it's now 3 actually. Before COVID, it was get fit and save money. Now it's get fit, save money, and travel more when we talk to our customer base. But it all goes very well for January, February. People start dropping off and going back to their old bad habits. So if we can create this automated functionality where you've got $5 going into a rent account, or $5 going into a utilities account, or a holiday fund, or an emergency fund, it's that, and that behaviour gets stuck with them at a young age, then hopefully it'll work for the rest of their life and they've learned.
Let's talk about the tax treatment of a kid's account, because there's 2 ways of setting up a kid's account, especially in the old school world. One is where it's actually in the child's name and they have a tax file number. And then the other way is the way that you've chosen with RAIZ. What's the difference there?
Yeah, look, at the end of the day, it's still a sub-account of your account. The funding comes out of your bank account. And by no means is this tax advice, and we suggest that you speak to a tax advisor in relation to your own personal circumstances as well. But so what happens is Tom's account will stay there as a sub-account to mine, and then when he turns 18, you'll get a message saying, would you like to transfer this It's been in Tom's name. We'll transfer it to Tom's name. He'll need to be KYC'd or complete the sign-up process to make sure it is a real person and it is Thomas opening the account, provide the tax file number, etc., and then it's his account there. So then there'll be a decision to be made on the tax treatment about when he sells those assets.
But in the case of when, like, I'm setting up the account for the Big O, I'll be responsible for any of the capital gains and dividends and income that might be arising.
Yes, yeah. So if you put some money in it and then you need to take some out of it, it'll be sold down. And with RAIZ, we provide an annual tax statement every year, and that'll come under your annual tax statement that say any distributions that you receive. As a side note, I was just looking at the numbers today. We've invested over $15 million in dividends in January for our customer base, which is huge. So any of those distributions that you would receive either in your name or in the kids' account will be on that annual statement for you to declare in your tax return.
Can you opt for dividend reinvestment plans?
It's all reinvested. Because of the structure and the IP we have behind it, and all the ETFs pay dividends and they pay us the cash, and then we reinvest that back into your portfolio. So you might get a dividend from the STW of $10, but we won't put that $10 back into that specific STW ETF. We spread that $10 across your portfolio. So everything gets reinvested.
ShareSite is the portfolio tracking and reporting tool that takes the hassle out of managing your investments. Here's how it works. Import your trading history with just a few clicks, either from your broker, from a spreadsheet, or manually. ShareSite organises all your investments in one place, no matter where the assets live, so that you can track your total performance. Go to the link in the description below and get 4 months free with the Shares for Beginners exclusive offer. Market prices, currency movements and corporate actions such as dividends and share splits are automatically recorded going back up to 20 years and ongoing to keep your portfolio up to date. Simply email your trade confirmations to ShareSite, or better still, get your broker to do it. ShareSite automatically updates trades in your portfolio, so there's no data entry required. ShareSite gives you a 360-degree view of your portfolio, with capital gains, dividends and currency fluctuations. I'm flummoxed as to how I ever managed my portfolio before ShareSite. It's easy to compare individual investments, identify non-performers and get an accurate picture of your total return. Believe me, it's changed my investing forever. And ShareSite's detailed tax reports makes your accountant's job easy. And we know that a happy accountant is a happy accountant, although you'll be saving hundreds or even thousands of dollars in fees, so maybe they won't be so happy. You can access ShareSite from anywhere, and because it's protected by bank-level security, you can get peace of mind knowing your data is always backed up and secure. So throw that spreadsheet away and get started now. Go to the link in the description below and get 4 months free with the Shares for Beginners exclusive offer. Okay, let's talk about education. How can you use the app to educate the kids more in their financial future?
Well, I'm very proud of what we're trying to achieve, and I think we have achieved in the wider data customer base over the last sort of 9 years because of that, creating that recurring savings and investings and awareness of the market, etc. And I think I've told you before, Phil, I'll go to a room of 300 people and do a presentation or a webinar on financial education, and I'll say, hey, put your hand up if you've got a super fund. And they all put their, especially in Australia, everybody's pretty much got a super fund if you're working. And then I'll say, leave your hand up if you're invested in the equity market. And I guarantee you 95% of them will put their hands down. Now, it's highly likely that they've got their superannuation is invested in the equity market in an Australian super fund. So it's that education and awareness that we're getting out there from financial education, all the old terminologies and financial literacy or financial jargon. So I'm proud of what we do there. But then if you bring it back down, what I'm really proud about and what interests me is the behaviours. By having something like RAIZ and having that roundup functionality, it makes people aware and more conscious of where they're spending their money. It's like kind of like, well, because I'm getting these roundups, how did that $6.52 of roundups come? Well, it was off my Netflix subscription, my Disney subscription, my Stan subscription. You go, well, do I need all those? So it's making people aware a lot better and a lot more transparent because it's in the palm of your hand, not necessarily in the format of your bank statement or anything traditionally that you've got. It's making people aware. So it not only does the financial education, financial awareness, financial inclusion, but it also makes an individual stop and look back and go, okay, well, where am I spending my money? Where can I actually save some money and potentially invest? So it's huge. I mean, it's watching the kids product grow over the last sort of 2.5, 3 years, and we've got over 45,000 accounts there. The fact that they're being set up by parents, grandparents, godparents, yourself, fathers and mothers, it's that they're thinking about their kids' future. They're thinking about that financial intergenerational, and I don't want to use the word wealth transfer because it's starting to get a bit overused, but it's providing the tools and the awareness and the education that there is something like RAIZ that can help for tomorrow.
So when you're talking with Thomas, are you going right into the nuts and bolts, like you're sort of starting to explain the portfolios and the asset breakdowns? You're getting to that kind of level, but how do you approach it with him?
One week he's fully into it, and next week he's back on his iPad doing something else or playing Mario Kart. But when we do, so I sort of, it's a bit like the way that we try and do financial education. It's some of it can be very complicated, but we try and break it down into bite-sized chunks of information that a customer can sort of compute and understand and relate to. It's like, one of our most successful posts on Instagram was, what does the ASX stand for? Because people see it on the news, they see it at the front page of the paper, but they don't actually know exactly what it is. So when I'm talking to Thomas, I explained to him that you're in the Sapphire portfolio, mate, because you've got the equity market and crypto, whereas Isabel's just in the equity market. And that's where he jumps on and says, Trump coin, the things that he's seen and heard and doesn't really understand, but he's starting to get the difference between those two. And that's at the age of 6. I didn't have that education at 6, or the access to that information. As I said, I try and explain to Thomas that Isabel's in the socially responsible, and then we've got a thing about, he leaves the shower running or he's too slow to get in. It's like, mate, what's that doing? And it affects the polar bears because the ice melts, and that's how he understands environmental climate change. So that's what I try and explain, the socially responsible side of that. So I'm trying to take it back to real life 6-year-olds, whereas when I speak to my 16-year-old nephew, he's all over it. He understands that. He goes, he's even used it with his mates to sound good. He says, I love the content because we have a definition of the week go out in our weekly newsletter. It might be compound interest, it might be diversification, it might be a merger and acquisition. They're bite-sized, usually less than 30 words, that we try and explain something so people can remember it. But he says, I've quoted it to my mates and it makes me look good. So it's giving him education that way.
So with compound interest, presumably, we're talking about kids and we've got a, maybe 15 to 20-year window in which their assets can compound. How do you view that, and especially in context of your own children?
I think that's important. I mean, I hear a lot of people and they say it's the 10th wonder of the world or something like that. But compound interest is, you're earning interest on your interest. And that people go, but a lot of people sit there and say, on my transaction account, I get 48 cents interest a year or something like that, because they're not the right interest-bearing product as such. But what they've got to understand is that the market, you think of the market where, you're putting in a regular deposit, you're buying the units or the ETFs or the shares, then you're getting the dividend reinvestment, and it's building on top of that. So, and basic example, you have $100, you get $1 dividend, then the next dividend's on $101, not $100. So it's compounding. And I think there's so many graphs out there. There's so many examples of, if you do $1 a day between now and the time you're 18, it'll be, $1 million or something, little asterisk at 8% presumed growth, no fees, etc. But they can understand that. And then that's where, if you can get the young kids to understand what that means to them today or just on that account, imagine the power of their super. Once they get 18 or they start the workforce, they have super, and they put that little bit extra into their super by the time they're 60. We're talking Isabel's 4 kids' accounts to 18. That's 14 years. But when she goes from 18 to 60 odd, that's where it's really easy to show what the impact or the effect of compounding can do.
Yeah, that's the Warren Buffett story, isn't it? Because you always see that most of his wealth was made after, I think he was age 60, and it was just because it had been sitting there compounding for so long, for most of the time. Yeah. What's it? The inaction bordering on sloth, I think, is one of their investing tenets.
Yeah, but it's kind of like I was talking to my brother about it the other day, and he's up on the Gold Coast, and the traffic and things like that on the highway when he's driving up, and he says he sits there and watches guys where he just stays in the same lane, puts his foot down and goes, and you see these guys going back and forth and trying to chop and change, and then they get to a set of lights and Cameron's next to him. It's kind of and I thought it's a bit like investing. People try and chase. They sell something because they want to chase a thematic, or chop and change because there's a new lithium stock that's going to go nuts, or something like that, or a crypto coin that's going to go nuts. But at the end of the day, consistency, small amounts over time, and staying in an asset can absolutely win. Again, hare and tortoise. It's a story that you and I have known for 50 years, sort of thing. There's nothing wrong with that. It actually works.
So you've recently launched JARS, and before we started chatting off air, you were talking about the incredible behaviour that you're seeing in terms of these JARS. Now, presumably JARS is you say, okay, I want to put money into this JAR because I'm saving for something. Tell us about that and the insights that you've gained.
Yeah, look, it's like the kids' accounts that we've just been speaking about. It's people are out there saying, well, I don't have kids. And kind of like I do want that segregation of my money or pots or goals. So we've come up with this. It pretty much runs along the same concept or the same technology, and the same. It does have an actual better UX UI at the moment. And we are upgrading our kids program, our kids in-app to go in line with JARS. But what essentially it is exactly the same philosophy where you have Brendan account, but then you have these sub accounts. And we launched on the 14th of January, and we've had a JAR created every 2.6 minutes since. And this, at RAIZ, we build products because our customers are asking for it. So we fingers crossed they use it, and it's been great. But as you and I were talking before, was I'm stopping and pausing and looking at what people are calling these accounts. And, we've all done it. We've all had bank accounts where we have sub-accounts where you might have a rent account, you might have an electricity utilities, you have a holiday account. But with the online stuff, it's very easy just to get on, transfer it back to my main account, direct debit, so that, I need to buy something. I need that instant gratification of a new pair of shoes or a pair of jeans or a surfboard or something. But this is sort of creating JARS underneath. And I could, again, have myself, my account in the Plus portfolio, but I could have a school fee account or a holiday account under a different portfolio. So they might be the aggressive portfolio or the emerald portfolio or the property portfolio. But what we've seen in the last sort of 14 days of being launched, or 17 days, is what they're actually creating for these accounts. And I think it's great. And it goes back to the two core principles: small amounts add up, but also we need to use the technology or lean on the technology that's out there today, i.e. automated recurring deposits and the sort of set and forget mentality. People are setting up accounts called Haircut. People are setting up, someone set up an account called Europe 2034. That's a 10-year goal. So we're enabling them with the tools to set up, and they've put recurring deposits on it, whether it's a weekly, daily, or monthly. And you can set a target and say, this is where it's a goal. It might be a 10 grand target or an 8 grand target. People are using it for haircuts. And this is what they're naming the accounts. New MacBook 14-inch Pro. Several for new cars, several for homeowners, several for new cat, new dog. It's exciting to see that we as RAIZ can create this tool, or in the palm of their hands, to set that up for them. And they might not get to their goal because they might need the MacBook Pro earlier, or they find a dog or a house, but it's helped them on that journey. And that's exactly what we're trying to do. So to see that, and I'm really looking forward to seeing how it goes over the next sort of month to really get the number of JARS up, because it does say, well, I do have previously, before JARS, you'd set a savings goal. I want to go to Bali on the 1st of March, $2,000, and you'd get that. You'd reach your target. you go to Bali, you take the money out, and you sort of have a good time, but you forget about savings and investings. Here at this time, you've got a Bali jar, but you might have an emergency rainy day fund or something with still that reoccurring going on. So you still remember that habit of saving.
And that's really important, having an emergency jar or an emergency fund as well. Are you seeing that sort of behaviour, or would you even recommend that kind of behaviour? Yeah,
absolutely. It's I grew up with making sure I had an emergency fund in case I needed a couple of $100 to fix the car, or there's a water leak, or I've had an accident around in the car or the house. I've got to replace the laptop. It's always important to have that emergency fund or that access to it. And if you can park it away in a equity market portfolio, like Buffett did, and it can just sit there, it'll do its thing, as the market's shown over the years.
Hey, look, I know you mentioned it before, but I just wanted to cover it again. When the big O turns 18 or 20, 21, whatever the age is, what is the process you go through with the account now that it's worth $1 million, which maybe at that stage is not going to be worth that much money?
Yeah, it's so you'll get a message as the owner of the account and say, hey, Phil, the big O is turning 18. Would you like to transfer this to an adult account? And then you'll say yes. Then you'll have to provide the full name, date of birth, address, and email address, and then everything will get sent to that, and then he opens an account, all the PDS, the AID, everything gets sent to him. He does the checklists. He'll link a new bank account unless you still want to fund it. You'll call for Big O. But it's just the exact same process. It sort of goes back into the flow of opening an adult account.
Mm. And getting back to jars as well, if someone's got a short-term goal rather than a long-term goal, should they be thinking, and this again, it's not investment advice, should they be thinking to be in more conservative investments when they're doing that rather than the maybe more aggressive ones?
Look, there's, the performance of the portfolios or past performance is no indication of future performance. And again, this is just general advice, not...
It is general advice, but that's worthwhile understanding, isn't it? That, because we hear the people saying all the time past performance is not any indication.
Yeah.
But it's so important to understand that point.
Yeah. What really upsets me is a lot of other businesses out there promote their returns only when they're good. And they don't consider that the market will have down days. It always has, and it always will. So you can't just look at the past performance and go, right, I'm in there. And I would not recommend that to anybody. I think the important part is that if you're going into these portfolios, you've got to understand the risk curve on it, and then you've got to be able to accept and understand what your risk profile is or your risk levels are for the portfolio that you're going into. And I wouldn't necessarily say consider it short-term versus long-term. It's stop, pause, understand what you're going into, understand the risk levels, and make sure you're comfortable with it.
Mm. Just as a general observation, Brendan, I've sort of noticed from doing this podcast how much of the weight of the wealth management industry is so focused on people with a lot of money. And, I'm happy you're doing good work here, or it feels like you're doing good work here in terms of providing this kind of tools for everyone as well. But, it's just astonishing the number of businesses out there that are targeting people who've got, $2, $3, $4, $5 million or, huge annual incomes. But then the focus then kind of dissipates away when you haven't got a lot of dosh.
Exactly. And look, that's exactly why I joined the business. It was, and I've told you before, a mate in Newcastle asked me, well, what stock should I invest in? I'm like, no, it's not a stock. It's think about the diversification, understand all that. But I want to be able to provide all Australians, wherever you are on the wealth curve, to be able to have an access to this and understand. And I think the important things with RAIZ Kids is that older generation with the wealth, that it's not targeted. It does sort of help and assist the younger generation get this financial education awareness, break down the barriers to getting into a CBA stock or a Macquarie stock, something like that is expensive in one unit, but they can get it into it on a fractional basis and get that understanding of how the market works and access to it. So I think it's our main goal here is to educate all Australians, no matter where you are in the world, but put something in the palm of their hands where they can see it, feel it, understand it. And as we said at the start, it's for a minimum of $5. And go back to someone like a Buffett or the big guys. The best time to start investing was yesterday. The next best thing is today. Don't put it off. Give it a go. It sounds a bit cliche, but invest in yourself, invest in your future, invest in your learning, your education, and if we can, educate the younger generation or pass this knowledge through, it'll be huge. I mean, if RAIZ Kids or even RAIZ full stop was available when I was 18, I'd be in a better financial position than I am today.
Mm. And of course, don't spend all your time looking at the app and seeing how your investments are doing, because, maybe once a year would be a good time. I know that we can't resist that temptation, can we?
Yeah. Well, even I had my RAIZ cap on over Christmas, and a tall guy, he was huge. And he came up to me, he says, RAIZ, mate, RAIZ. And I said, yeah. I said, oh, do you use it? And he said, yeah. He goes, oh, look, I love it. I use it as a Christmas club account. It sort of gets me $700 or $800 a year, and it helps me get through Christmas. And I said, oh, cool. He goes, I said, how'd you hear about it? He goes, oh, mates put me onto it. A couple of mates put me onto it. I said, yeah, good on you, mate. He goes, yeah. And I said, I work here. And he said, mate, it's good business. I love it every year. I love it. And he doesn't log into it because it's a set and forget. Because what we've noticed is that customers, if they can stay 3 months using it, they understand, because in that 3 months there will be a bit of a market dip or a market correction, as they may call it, but you understand the volatility. And if you look over the ASX charts over 20, 30, 50 years, you can see that. And, we're not expecting it. And again, back to our comment, don't look at the recent performance and think it's going to do it again, because unfortunately there are cycles in the market, but you just got to be able to sort of sit there, set, forget, look at it when you can to understand what's happening in the market, but don't panic.
Okay, so tell listeners where they can make their first steps in downloading the app and getting started.
So the RAIZ app is free to download from the Apple Play or the Google Play stores, Apple Store or the Google Play stores. We also have a web app for registration. So if you go to www.raizinvest.com.au, that's RAIZINVEST, you can start your journey of education and entering the market there. Very simple.
Brent Malone, thanks very much for joining me today. It's been great chatting.
Phil, always good to chat and great to have some laughs as well. Thank you.